Good afternoon, traders and investors. Will back here with another one, coming to you with a Thursday market recap. Hope all of you had a very beautiful day of trading today. And in today's markets, guys, the S&P 500 hitting a brand new all-time high. And that was off the back of two pieces of news. Number one, retail sales came in better than expected, which shows that even though the consumer is weakened, they remain resilient in this economy. And number two, of course, has to be the earnings coming out of TSMC, showing that the AI demand is still very real and very strong. So in today's market video, guys, we're going to go over a few things together. Number one, briefly recap the retail sales and jobs numbers that came out today. And number two, of course, go over the earnings that I have prepared for you guys. Two big companies, TSMC and Netflix, will be looking over their earnings in just a few short minutes. Thereafter, we're going to cover our major technical analysis rundown of our major stock market indexes, followed by our big tech names, see how those are shaping up as well. And that'll be pretty much it. The portfolio recap will be done at the end of the day tomorrow to do a full recap on the positions that we opened, closed, the profits, and what positions I will be maintaining into next week's action. So without further ado, guys, a lot to cover today. Let's jump right into the action. SPY, pretty much flat on the day. Now, this was a heck of a reversal, guys. We popped early on in the morning off of the back of the retail sales data and those very bullish TSM earnings that sent semiconductors in a frenzy and kind of gave it all back over the course of the day. The bulls possibly getting a little bit tired here at the all-time high. We've had 6 weeks in a row of beautiful upside rally. So a little bit of pullback consolidation would not be the worst thing. QQQ down, QQQ up about 0.07%. Same thing. QQQ was up over 1.25% over the course of the morning and then kind of gave it all back throughout the day, filling the gap to the downside. So take a look at the heat map right here, and you'll see that today, guys, very mixed market. Most of the action was reserved to the semiconductor names, of course. NVIDIA, AVGO having a good day. TSM up almost 10% on the day. Big tech largely mixed. The loss leader on big tech, Google for the day. Financials doing pretty good, continuing on their bullish run after those banking earnings. Healthcare not doing so well. Elevance coming out this morning. They were down 18%. The health insurance providers are struggling recently after their earnings reports. And the other half of the market, guys, consumer defensives down to slightly flat. Energy, bit of a mixed trade as well. And the bottom half of the market, very, very mixed as well, right? So very mixed market today. Definitely couldn't say that it's a unilaterally bullish momentum across a broad market, right? Now, moving on to the one-day relative performance, you will see how mixed the market was, guys. Pretty much half the things up, half the things down, right? Technology led to the upside by semis, energy, financials, basic materials, and everything else pretty much to the downside led by real estate and utilities. And the 1 week, guys, we're still looking good on the 1 week. Everything pretty much in the green, except for consumer cyclical and the energy trade. So before we get into more technical analysis, guys, let us do two quick things. And number one is going to be a quick little recap here of the retail sales numbers. So retail sales month over month coming in 0.4% instead of the 0.3% expected. So not the best number, but still shows growth in terms of retail sales, right? So even though the consumer has been getting slightly weaker, they are proving to be more resilient than a lot of people have anticipated, if you believe the data, of course. Now, in terms of the jobless claims, we came in under the expectations. This report comes in every single week, so I wouldn't put too much emphasis on it, but at least it shows us that the unemployment is not getting significantly worse on a weekly basis, right? So that's pretty much everything for your retail sales, and the jobs numbers, guys, come in better than the expectation, but I wouldn't say it was a blowout, right? So the market reacting in a positive fashion to those numbers. Now let's get into the good stuff, guys. And the good stuff, we're going to start off with a banger, and that is going to be number one, Netflix earnings. So Netflix coming in today, 5% in the after hours gain. Netflix actually had a very, very, very nice quarter, but they're struggling against the tough comparable numbers that they've been putting up the past 2 quarters, right? A little bit of context here. The past 2 quarters, Netflix was doing amazingly because it was beating the subscriber growth metrics by a lot, right? The guidance was between 4 and 5 million the past 2 quarters, and they were pumping up 8 million new subscribers in each of the 2 last quarters. So the expectation was fairly high. So even though they did have a very good beat this quarter and raised the guidance for the next quarter as well and through 2025, you know, they are kind of a victim of their own prior success as well. So let's take a look at some of the numbers right here. Very good beat on the bottom line EPS by about 5.5%, and a nice little bump on revenue here by about 0.5%. So let's get into the details of those Netflix earnings. Netflix third quarter subscribers barely beat estimates as ad tier members jump 35%. All in all, guys, the moral of the story for this earnings report is that it was business as usual for Netflix. No crazy beats to the upside, no massive disappointments to the downside, just business as usual. So let's get into it. Netflix posted third quarter earnings Thursday that beat on the top and bottom lines as its advertising business continued to grow. The streamer's ad tier memberships jumped 35% quarter over quarter. That's very good. The company is on track to launch the service in Canada, talking about the ad tier memberships, in the coming quarter and more broadly in 2025. If you don't know how Netflix reorganized their plans, you guys might remember, right? They had the $10 a month, which was the basic subscription, and now they've staggered it, right? They've included a lower tier to acquire more members and have more member retention, right? For a lower price. And then to the flip side, if you do not want any advertisements, you can go with the standard plan, which starts at about $15.49. The mid price between the two, of course, is that same $9.99, right? So they're trying to attract more people to the platform with a cheaper price and keep them within the ecosystem. They're trying to do kind of what Apple does, right? Get you in, and then once you're in, they want to lock you in there. So moving on further into the Netflix article, while Netflix does not expect advertising to become a primary growth driver until 2026, it noted that the ad tier accounted for more than 50% of signups during the third quarter in countries where it is available. Paid memberships, this is where they beat 282 million versus the 282.15 expected. So beat, but not by a crazy margin like they were doing in the last two quarters. Netflix is projecting revenue for the full year of 2025 to be between 43 billion and 44 billion. That was literally the exact consensus estimate, guys. TradingView did not update their numbers yet. So if you look over here, 2024 or 2025 expected revenue, right? 43.51 was the expectation. So they re-guided for the same thing, 43 to 44. So the guidance wasn't amazing, but the guidance that was quite good is the margin improvement. We'll get into that. Right? As it improves its core series and film offerings and invests in new initiatives such as ads and gaming. Much of that revenue growth is expected to come from what the company called a healthy increase in paid membership. So organic revenue growth, not through pricing increases, right? Netflix added 5.1 million subscribers during the quarter, more than the 4.5 million Wall Street had expected. Now, moving on further into a bit more of Netflix, guys, I want to bring your attention to the net margin expansion. Here's Q3 23 through Q3 24, and you can see they've done a great job at improving those net margins, coming in this quarter at a record 29.6, guys. Look, operating margins were usually, right, 43% gross, 24% operating, and about 19% net. Those metrics have all significantly improved over the last quarter. Their bottom line margins now sitting at 24%. This is going to be above the best net margins that they've ever posted. So very nice to see that Netflix, even though they may be growing a bit slower in terms of subscriber growth, they're really starting to drive profit to the bottom line, and shareholders really like that. Year-over-year growth for paid members, however, is 14.5%, almost. Very solid number by Netflix, guys. Nothing bad to see here, right? Audience of 600 million plus and growing. So that's why they're doing the advertising tier. There's so many eyeballs on the Netflix platform. It is really a great location if you're an advertiser to place some ads, because they have a tremendous amount of user data, depending on the shows, the type of content that you like watching. So it's a targeted advertising scheme that they're running right there, right? So very solid numbers by Netflix. Nothing more to report than that. In terms of the free cash flow, Netflix has also come in with a very nice free cash flow number over the course of this most recent quarter. And they're going to be using more and more of that free cash flow to bring down their shares outstanding. Netflix has never been known as a big buyback player, but that is starting, right? When you have an improvement in net margins, improvement in free cash flow, you can start using some of that money to bolster EPS, right? To show better than expected EPS by buying back some of your shares, of course. So that is what Netflix is seeking to do pretty much. Business as usual for the company, guys. Nothing crazy to report to the upside, nothing crazy to report to the downside. The expected move for earnings was about 7% in either direction. So they're coming in slightly underwhelming in terms of the expected move, but still a very good showing for Netflix. So now in terms of the valuation, guys, well, you guys know where I stand on Netflix. I really love this company. Net margins are fantastic. They don't really have a problem with debt to speak of, right? Decent amount of debt in relation to the free cash flow they bring in on a yearly basis and the amount of cash that they have on the balance sheet. So the balance sheet is fairly okay. Nothing major to report there. In terms of the forecast estimates, guys, look at this gorgeous EPS expansion through through the next 4 years as they drive more and more money to the bottom line and start buying back more and more shares as well. Take a look at the revenue expansion, very consistent and predictable. This is what I look for in a company, right? Consistent, predictable, not much to see here, just business as usual for Netflix. So moving on in now, revenue growth of 10% per year through 2027. EPS growth is fantastic at 23% per year. So let's take a look at the valuation here. I did it at 7.15 just about half an hour ago. It's not that different from where they are right now at 7.20. Forward PE at about 36.1. That is average for the company in terms of where it's been in the last few years. In terms of the PEG ratio as well, if we divide this PE ratio by the EPS growth, we get a PEG ratio of 1.57. I'll remind you, anything under 1 is very, very good. Between 1 and 2 is okay, and above 2 starts to get a little bit high. So at 1.57, guys, it is quite decent. Now, the free cash flow yield, although they are improving it, is somewhat a little bit low right now. This is just a reflection of how high the share price was, right? When the share price comes down, the free cash flow yield gets better. And when it goes higher and higher, well, then obviously the free cash flow yield gets a little bit worse. Between 2.5% to 5% is what we're usually looking for baseline minimums. The higher you can get, close to 5%, is obviously the better. At 2.4, it's a bit low, admittedly, but I wouldn't say it's a problem because we know the company's growing margins, it's growing free cash flow, so that should not be a problem. In terms of the technicals, guys, I still maintain that this buying area right here, 700 down to about 660, is kind of where I want to pick up, or rather swing trade the stock more often. So coming up here at about 721, not the best swing trade opportunity. It sucks because I would have loved to play this prior to earnings, but then again, if we would have had a 7% drop, guys, we would get much better pricing down here, right? So this zone could be a very decent zone for a little bit of a, weekly higher low retest for a little bit of a swing trade higher. But in the event the markets unravel throughout the earnings season, and let's say Netflix just loses the weekly uptrend and goes down here, really 650 down to 620 is where I would consider adding a bit more shares to my long-term portfolio, because the valuation, although decent right now, it's not as if we're getting a crazy deal to the upside. So just business as usual for Netflix. If you're a long-term shareholder, not financial advice, but I really don't see anything to be concerned about in this report. I am actually quite pleased about it. Now, moving on to company number 2, and this one was crazy, guys. TSM going in an absolute monster rally over the course of the morning. They were up almost 13% before retracing a little bit, ending just under 10%, but they had fantastic numbers, and I kind of knew what to expect. I didn't know it was going to be this good. I knew it was going to be good, but not this good. And the reason I knew is because last quarter I had never heard a CEO be so bullish about the way he talked about demand for his chips. He said last quarter that this quarter the demand was fully booked, or production capacity was fully booked through the end of 2025. And today he reiterated the exact same thing. They just cannot keep up with the demand. They are really leaving the other competitors in semiconductor chip manufacturing, the other big players being Samsung and Intel, they're kind of leaving them behind in the dust at this point, guys. It's really not even close. So let's move into some of the numbers, shall we? So moving into the TSMC numbers, NVIDIA and Apple supplier TSMC shares pop 10% after quarterly profit soars on AI demand. This earnings was so bullish, guys. Let's get into it. Shares of TSM, the world's largest producer of advanced chips, serving clients such as Apple and NVIDIA, jumped 10% on trading after the company reported a 54% hike in net profit in the third quarter. This is pricing power. The company expects annual revenue growth in the last 3 months of the year as global chip makers continue to benefit from demand boosted by AI applications. Demand for AI stays very strong. Net revenue came in at $23.5 billion in the third quarter, up 36% year on year. TSMC's gross margin rising to 57.8% over the July through September period. This is absolutely massive, guys. You're talking about a company, right, that's been expanding its margins adequately, but it is a cyclical business. And now, as you can see, their gross margins last quarter were about 53. So they just came in once again at 57.8, which is the higher end of the range on top here that we've ever seen for the company. Let's move on. Based on the current business outlook, we expect our fourth quarter revenue to be between 26 billion and 26.9, which represents a 13% sequential increase quarter over quarter, or 35% year-over-year increase at the midpoint. That is absolutely fantastic, growing revenue at 35% year over year. In the third quarter, our business was supported by strong smartphone and AI-related demand for our industry-leading 3nm and 5nm technologies. Now, here's what the CEO had to say. CCWA, the AI demand is real, and that the company has experienced the deepest and widest growth of anyone in this industry as a result. That is the benefit, guys, of having a very strong moat, of being the leader of an industry, right? You just get all of the demand. We have talked to our customers all the time, including our hyperscaler customers, Google, Microsoft, Facebook, etc., who are building their own chips. And almost every AI innovator is working with TSMC. The Taiwanese chipmaker, whose advanced chips are vital to a swath of products ranging from smartphones to AI applications, has been increasing its manufacturing presence worldwide, carrying out a vast overseas investment of $65 billion for 3 chip plants in Arizona to meet US demand, as well as opening its first factory in Japan earlier this year. So expanding production very, very nicely to meet that demand. Nothing else to say here, guys. Extremely strong. Some market participants have questioned the long-term resilience of the AI boom and the return on increasing investments in the technology sector. Now, here's what Young Liu, CEO and chairman of key Apple supplier Foxconn, here's what he said. The AI frenzy still has some time to go as advanced language models evolve with each new iteration. So TSMC remains extremely bullish on the sector. Gross margin was 57.8. Operating margin, 47.5. I'll bring back this chart again. 47.5 puts us at the top end of the range again. And net profit margin, guys, this is not a software company. They're manufacturing physical products. To see a product manufacturer with above 40% net margins is extremely solid, guys. I can't iterate how solid it is. Once again, towards the top end of the range for this quarter, guys. And TSMC has always been a very profitable company in terms of the products that it makes. You can see down here, the net margins, right? They're always high 30 percentage points in the last 5 quarters. You know, and even over the last 4 years, they've been in the high 30s to low 40% range. So extremely, extremely strong numbers from TSMC. And here's your guidance for Q4, right? Same thing, 57% gross, 46% operating. So we can expect between 40 and 42% net margins again for the company, right? Free cash flow again was very, very good. First 9 months ended. You can see that they generated roughly, I noted it down right here. In the last quarter, they've generated about 5.7 billion in free cash flow, which is in line with the company's historical averages, right? Some quarters they bring in a little bit more, some quarters a little bit less, depending how much money they spend on capital expenditures to expand their plants, their property, and their equipment, right? So you can see that usually they bring in anywhere between, let's call it, $5.5 to about $8-9 billion. So this quarter is a bit on the lower end, but then again, they did say that they were expanding production capacity with those plants in Arizona and the factory in Japan as well. So that is completely logical for the company too. So very, very good showing by TSMC. Let's get into some of the fundamentals right here. As you know, net margins are not a concern for the company. Let's move on a little bit deeper here. We can see that in terms of their balance sheet, so healthy, guys, way more cash on the balance sheet than debt. And they do bring in decent free cash flow per year. Take a look at their curve expansion in terms of EPS. Gorgeous EPS expansion curve, at least over the next 3 years, and a beautiful revenue curve as well. So no problems at all for TSMC, reiterating that demand is extremely strong through 2024 and 2025 as well. Now, moving into the valuation, right? So the forward PE ratio at 205 right now is about a 29.7, somewhat elevated, but in line with where the company's been trading in the last roughly 3 to 4 years. The forward PEG ratio at 205 is about a 1.52. So kind of like Netflix, right? Really in between the 1 and 2 range, which is fairly decent. Nothing bad to say about this PEG ratio for the company, right? It's not cheap, but it's also, even though it's at the all-time highs, it's also not extremely expensive either, right? Now, the free cash flow yield is better than Netflix, however, 3.3%. So this one is a decent deal. In terms of where I would like to buy it for my next swing trade, well, you guys might know me by now, right? We've got a beautiful weekly uptrend. We broke out of a key all-time high resistance range. So it opens up one of my favorite trades, guys, the good old breakout retest, and possibly run. So if we get a retest down here, 190 to about the 180 area, I would be very tempted to take this retest trade and possibly force some trend resumption into the last quarter of 2024, which they said would be very, very strong, and into 2025 as well, which is going to be an extremely strong year for the company as well. So I expect this trend to be maintained. Those are just a few of my thoughts on TSMC as a whole. So congratulations to all the TSMC and Netflix bulls out there. You guys definitely had a great earnings day today. Now, moving into the technical analysis portion of the video, shall we? Moving on to the SPY, and before we do that, give me a very brief moment. And let's get into it. So SPY retracing all the gains, right? So where is the SPY chart is a little bit messy right now, right? We had the hourly uptrend coming into today, which led us to believe that the daily higher lows were possibly set, going for a new daily leg higher. However, now keep an eye, hourly trend is lost. So we're a lot of push and pull at the all-time highs, which is why I say the bulls might be getting a little bit tired. One thing's for sure, guys. If we roll over these lows of yesterday, 579, we will have officially lost the daily uptrend. You open the doors for the bears to set up the lower high into lower low, daily downtrend setup, and then you may open the door for a little bit of healthy, keyword healthy, weekly consolidation. It's been 6 weeks of beautiful rally, guys. A little bit of a pullback never hurt anybody. In terms of the larger pullback areas, well, the daily obviously looked down here at about this 574 prior resistance, could be newfound support. But in the event we roll this one over too, well, then the larger levels need to come at play. And that's going to be 565 down to about 560. This $5 range, big weekly prior resistance, should be weekly support, and the 12 EMA on the weekly is as well. So a little bit of a breakout, retest, and possibly run into Q4. We will see. But as of now, no major red flags on the SPY. Still somewhat healthy consolidation, even with today's price action. On the QQQs, the analysis is almost the same too. Beautiful daily uptrend. Daily higher low is set. You know the daily higher low is set because they got the hourly trend back. But then unfortunately, they lost it. So in the event, QQQ is a little bit different. In the event we flush tomorrow's low here, that would be an official daily downtrend. Low, high, lower high, and then possibly the lower low. That would consolidate the daily downtrend in motion for the bears. And then we have a first line of support defense down here, 483 down to about 477. And you can even see that level on the weekly too, right? Just looking for a weekly higher low for possible further trend continuation. So keep an eye on this support range, and the 12 EMA on the weekly is there as well. But the bull's not looking too bad. They have crossed the weekly MACD as well. So I wouldn't say that one day of red is going to push the bar too much. Even a little bit of weekly consolidation into next week would not be the worst thing. The bull's still in full control of the longer time frames right here, and we have not lost the daily just yet. So everything's still not looking too bad for the bulls. But as I say on the channel all the time, guys, we will take this one day at a time and trade accordingly. Moving on to the XLF financials right now. Financials looking very strong today with some further continuation. Daily uptrend, full control of the bulls right now. When this move tops out, and we're getting a little bit topped out here on the RSI, a little bit overbought, right? In the event we kind of have a little bit of a retracement, well, we're going to be looking anything above 45, daily higher low for possible further trend continuation. If we pull back too much, and that will open the door for the lower high into lower low daily downtrend. You guys know the drill. What are we looking for here? Just looking for a weekly higher low for possible further trend continuation. And I would be targeting the prior resistance range, which will now be support. The 12 EMA should be curling up to here as well. And that confluence area is about 45.80. So keep your eyes peeled for that. But financials definitely one of the biggest winners of the last week and a half with those gorgeous earnings from the banks. Moving on to healthcare right now. Healthcare not performing too well. Oh, by the way, my favorite financials play, by the way, I'm looking at Berkshire. Berkshire doing one of my favorite patterns right here. Breakout, retest, and possibly run. Look at the daily MACD showing momentum coming back to the bulls after about a month's worth of consolidation. And the weekly just looking for continued weekly trend expansion, right? So it could be a decent little swing trade here on Berkshire if that's the style of trade that you like. Not financial advice, of course. Moving on to XLV. So XLV, daily downtrend was in motion. We got the big engulfing move, and now it's up to the bulls to play some defense. Give me the higher low, anything above 150.5, daily higher low for possible further trend continuation. But if the bulls give all of this back here, guys, it's not going to look good. You open the door once again, lower high into lower low, and that unfortunately would just be a continuation of the weekly downtrend. Healthcare earnings so far have not been the greatest, right? Most of all your companies who have reported so far in healthcare have all come down drastically after. My two favorite companies for plays right now, though, has to be UNH. If we get a retest of the 550, I'll play it again. I played it after earnings, and we made a very decent trade, guys, on this one after earnings. We literally bought almost the bottom at 550 with our Discord members, and we sold almost the top here at about the 570-ish range. Very, very decent swing trade. So now if it opens up again, I'll remind you what we're looking for here, guys. The reason I like UNH, monthly uptrend into monthly higher lows for further trend, right? Breakout, retest, and possibly run. One of my favorite patterns, right? I only really trade two patterns on the channel, and most traders do, as a matter of fact. Either the breakout retest, which is known as the trend continuation trade, and the trend reversal trade, when we're looking to kind of identify bottoms and points of reversal. But these trend continuation ones, especially if they're done on the longer term timeframes, can be quite successful for the most part. My other favorite healthcare trade is TMO for largely the same reason, right? Nice monthly uptrend, looking to set the monthly higher lows above this whole range of resistance and maybe pop a little bit more. So those are the two ones I'm looking for most aggressively on healthcare. But all in all, not looking the worst. But if we roll over and continue into this weekly downtrend, just know what the bulls are going for here, guys. We're going for the monthly higher lows for further trend continuation. The biggest monthly level, guys, is down here at about the 147. Moving on to semiconductors now. Semiconductors, the biggest winners of the day, of course, because of those very, very bullish TSMC earnings, right? So SMH, not looking too bad. Daily uptrend is now still protected. We've gone for the daily higher low, and now we're looking for the continuation of the daily uptrend. It is a battle between the bulls and the bears right now in this zone of support, which we're pulling back into 257 down to about 249. However, if they cannot get the daily trend continuation done, understand that if we break yesterday's lows, we're going into a daily downtrend, and daily downtrend means weekly consolidation. So if that does happen, keep your eyes peeled. Going to be looking for a weekly higher low for possible further trend continuation. And the weekly higher lows should be coming in this big area of support, 238 down about 225. I stay the course, guys. My favorite way of playing pullbacks in semiconductors right now is by selling puts on my favorite companies. The volatility is good. You usually get a very good wide margin between your where the market price and where your assignment level is. So this is one of my favorite sectors to be writing short puts on right now. So any declines on the weekly, I'll be looking to go shopping on my favorite names individually. Moving into the Russell right now, Russell down about 0.27%, getting rejected in this area, guys. This is going to be a tough one for the Russell, right? 232 down about 227. So the Russell not looking too bad right now. In terms of the daily, the bulls have a lot of space. At this point, if we do get a decline rejection from the zone, going to be looking to make a daily higher low for possible second attempt at cracking through this resistance range. It's been a big one, guys, and that's no secret, right? So the bulls have a lot of space. We'll see how they react to the zone. And on the weekly, if ever we do not get it done, guys, a lot of space on the weekly as well for a possible, if we cannot crack this on this weekly leg higher, well, we're just going to have to set up a weekly higher low and make a second attempt with a bit more momentum. But so far, not looking too bad for the Russell, guys. The way I use this more than not is just using it as a fear and greed index, right? When the Russell has a lot of momentum, it shows you that there is a risk on environment right now for equities, which is going further than just the Mag 7 and defensive names, right? The money is now pouring in to the risk on trade. And usually when you have heightened fears of recessions or conflicts or economic downturns, usually the money does not pour on to the risk on trade. So this price action in the recent last, let's call it 4, 5, 6, 7 weeks, shows that the market does have a propensity to go a little bit risk on right now, and it's kind of discounting the probabilities of a recession at this point, right? That's what the price action in the Russell shows more than anything. And lastly, the Dow Jones. Dow Jones not looking too bad today. Dow Jones setting a new record high by a few pennies, but still got to give it to them. Daily uptrend clear as day right now. Daily higher lows are set and looking for the daily uptrend continuation. However, if we double top right here and break yesterday's low, that will be daily downtrend, and we will be looking into a little bit of weekly consolidation. But who's in control here, guys? Well, it should be fairly obvious. The weekly bulls, full control. Any move lower, going to be looking for a higher low, anything above 39,900. higher low for possible further trend continuation. So the Dow Jones looking quite healthy indeed. A little bit of a retest on the weekly, guys, of this range, right? If we can get a retest down here, talking about 41,800-ish, could be a nice little level for a swing trade on the Dow Jones for a long continuation. That's pretty much everything for our indexes, guys. Now let's cover a little bit of Bitcoin, because Bitcoin is kind of stalling out, but it's still looking quite good in my opinion. Daily uptrend is roaring on Bitcoin right now, but we know we're coming in to this very big area of resistance that's challenged the bulls for all intents and purposes since the month of March. So we know it's going to be a challenging area. The reason I like looking at the Russell and Bitcoin is because these are the risk on sentiment trades, right? You know that if these ones are running a bit more, that the markets are kind of going into the broadening out towards the risk sector of the market, which, as I was talking about in the Russell, right, can be a gauge of whether or not the market's feeling greedy or whether or not the market's feeling fearful. And right now, the market is feeling a little bit more greedy than not, right? Don't even need to look at the CNN Fear and Greed Index, but let's just pull it up, right? You can just use IWM and Bitcoin as a gauge. This one should be green. I haven't looked at it, I promise, right? Should be greed. And it is greed, right? So I never really use that. My proxies are IWM and Bitcoin for the risk on momentum for the markets right now. Daily uptrend looking good. If we do pull back from this zone, anything above 62,000, looking for the daily higher low for further trend continuation. Could find some support in this lower area right here, right? 65, 64. This lower zone could be acting as a first line of defense for your bulls. The moving averages are there too. So watch if we pull back, how we react to there. And the trade we're looking for here, guys, the trade that is the true trade, in my opinion, is the weekly, right? We have not had a weekly uptrend since, right? Even here, could not get it done or rolled over. Here, they finally have the weekly uptrend. The candle closes on Sunday, though, so we'll watch how it closes until Sunday. This is the first weekly confirmed uptrend, guys, in 6 months. So we have to pay attention, especially when your MACD is doing this. This is 6 months of MACD. Bearish, 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 bearish. Oops, getting into the bull cross territory. And we know that this has been a massive monthly bull flag as well, right? Bull flag at the tops, not giving back too much in relation to the prior all-time highs. Bull flag sitting on the previous all-time highs and now possibly looking for the monthly leg of expansion. You guys know when Bitcoin has a monthly leg of expansion, usually it goes pretty quick, right? So just keep your eyes peeled for that on Bitcoin. Moving into Apple. Apple not looking too bad either, but really Apple is currently struggling at the previous all-time highs, but no red flags for the company, right? We know what they're trying to do, trying to set up for the daily uptrend. They broke out of the range of resistance, the roughly 1.5 month range of resistance, broke out, retested a little bit. Now they're looking to run. So we will see over the next few days of trading whether or not Apple can get that daily uptrend in motion and start breaking through the all-time highs. If for some which reason they give it all back, roll over, then unfortunately we will be looking for more weekly consolidation, right? The weekly candle is not done just yet. I would like to see them close above. It would give us the first weekly uptrend in a very long time. Triple top right here, trying to break out in a weekly trend pattern formation. In the event we give it up though, watch how we react to these lower levels. 223, guys. That's going to be the key structure to respect. Just tighten up, right? This is a tightening range. Tighten, tighten, tighten. Usually they do break bullish, but if let's say earnings come out next week bearish for a lot of big tech companies, Apple may just start revisiting the lower 220, 215. And this is kind of where I want to position for a little bit more swing trades if it comes back. So far, the breakout is not, the risk reward for the breakout is just not there for me right now. And in terms of adding long-term shares, the valuation of the company is a little bit too high for me. So I am a long-term Apple shareholder. I'm not selling any shares. I'm just holding. I'm not really adding up here. The valuation is a little bit too rich for me, but I'm also not selling anything. I'm just kind of holding what I have. Moving on to AMD right now. AMD still struggling, guys. Still struggling even after such bullish earnings by TSMC and all the other peers, the sector peers running. AMD, unfortunately, not able to get the job done, right? So AMD stuck in the daily downtrend, not giving up the support area just yet, right? 162 down to about 153, highly contested area. A lot of different times over the course of this year, and this time is no different. So daily downtrend in motion. We're still looking, guys, for the hourly trend change. We got the nice bounce today, couldn't convert. Once again, rolling over, hourly downtrend. So unfortunately, this daily leg down is not done. If we break down below here, keep an eye, the 200 daily moving average is sitting right about 152. And what are the bulls looking to do on the weekly, guys? This is the most important time frame. They are looking to set up for the weekly higher low for possible further trend continuation. So if we pull back a little bit further, lower 150s, the way I like playing this one is with short puts. If we pull back lower 150s, we should be having an opportunity to write some short puts. 140, maybe even down to about 135, which is an area where I would not mind picking up a little bit more AMD shares. So that is how I'm looking to play AMD personally. You know, it's not looking the worst for AMD because we do still have this weekly uptrend in motion, but definitely the daily bulls right now are struggling. I would have loved to see them maintain this area a little bit more than they have been, but it's not yet. It's not over yet. They still have a lot of space. Anything above 131, still looking for the higher low for possible further trend continuation. And the valuation right now is not that bad on AMD. Moving on to Amazon. So Amazon also looking decent today. Nothing big to report, right? Amazon has their earnings next Thursday to be exact. So not that many trading days left for Amazon as a whole. But we know what's Amazon trying to do. They had the daily downtrend and now we got the engulfing move. Got rejected at the 190 to 187 resistance range. You know, has been happening a few times over the course of this year so far. Once again, getting rejected. Trying to go daily higher low for the daily uptrend breakout. Now, in the event that we fail, guys, and break below, what is this, Tuesday's low right here, if we break down below, daily uptrend, a daily downtrend once again in motion, and we will continuously be looking for a weekly higher low on this stock. At this point, anything above 168.42, going to be looking for that weekly higher low for possible further trend continuation. And I'm a big fan, guys. If I can see Amazon back down here, 180 to roughly 175, I will be looking to build some positions with some short puts. And if for any which reason after earnings we get destroyed and come down, because we know it's possible, the company can have great earnings, but you know how fidgety Wall Street has been about earnings this season, right? And the last season as well. If for some which reason, just like last quarter, we plunge on Amazon like this, down into my big zone right here, 173 down to 160, I'm going to go quite heavy with some leap options, probably for mid-2026, because I think Amazon's going to have a good remainder of the year, a great 2025 as well. So I'd like to have some more long-term positions for Amazon down there. That's just how I'm looking to play the stock. Moving on to Google. Google coming down about 1.34%, right? So Google not having the best time, but focus on this pattern. They're trying for the inverse head and shoulders. The next area of support down here, about 161, 160, the 200-day moving average. And we do have a decent bottoming out area, right? It's tested it a few times around this area, 160, 158, a few prior times as well. So that's the next area right here. I know my next big level is down here, but this is kind of like the short-term area we're coming into, right? Price action, very messy, right? Daily downtrend, nice push up by the bulls, but now the bulls have to do step number 2, have to set the daily higher low and go for the daily trend change. If we roll this over, daily downtrend is maintained. And once again, we are just looking for a weekly higher low. It was a weekly downtrend. We got a nice engulfing move, but now they need to prove it. We need to set the weekly higher lows and go for the weekly trend change attempt. Overhead resistance is, of course, 179 down to about the 170 location. Google with earnings in roughly 2 weeks' time, 2 Tuesdays from now. In the event Google comes down into here, once again, 160 over the next few days, I will be writing some aggressive short puts with a little bit more time on them, 30, 45 days. Close to the money, right? If we come down 161, I'll probably go with maybe the 157s or maybe even the 160s, depending on how bullish I'm feeling that day. And then, of course, in the event we completely undo everything and on an earnings drop, we come back down here, 152 to 140, I will be sending a lot, well, not a lot, but a few more leap contracts at this trade, probably for mid-2026. I love Google, and the valuation right now, guys, around the 160 range is super cheap. The cheapest of all the big tech names and one of the cheapest amongst the entire tech sector. Moving into Meta right now. Meta coming, roughly flat on the day, right? I was about to say coming down. Wish they did. Daily downtrend is maintained for Meta right now, losing the 12 EMA, which is your short-term guide. So in the event we continue this daily downtrend on Meta, just understand what the context is, right? We are in for a little bit of weekly consolidation on Meta, and I'll be eyeing this area right here, 545, 540. This is the classic breakout, retest, and possibly run for some trend continuation. So I'll be targeting this lower location on Meta if we do get that opportunity, guys. And how do you know that the daily downtrend is done? Well, eventually you'll need to see the bulls put in a somewhat of an engulfing move and reset higher low, higher high. That's how you know the daily consolidation is finished. You know the weekly higher lows are set, and most likely the bulls are looking for that next leg higher. So as of right now, no red flags on Meta, but keep in mind, guys, their earnings coming up in 2 weeks' time, 2 Wednesdays from now. And the valuation, even at $600 when we did it recently, 1.4 peg, guys. Very, very, very cheap, despite being at the all-time highs, and an amazing free cash flow yield to go along with that growth rate. Moving on to Microsoft. Microsoft was up, Microsoft was down today and ending roughly flat, right? 0.14% to the upside. Very messy price action on Microsoft right now, right? Arguably very tough to decipher which way this one is going to break. One thing's for sure though, guys, big overhead resistance, 424 up to about 433. Big period of resistance for this stock many, many times over the course of this year. So right now the bulls are trying to go for the engulfing move, eventually trying to reset that daily. I would love to see them pull up into this resistance, create a lot of space off these lows, and then try and get a daily uptrend shift going. However, in the event these bears are too powerful and they kind of roll us over once again, guys, just understand we are still hunting for a weekly higher low. Anything above 400 for the weekly higher low should just be for an attempt for the weekly trend change for the bulls. And if we give all of it back, similar to what we did right here, right? We knew they were trying for the weekly trend change here, gave it all back. Well, I'm not saying that Microsoft is going to roll over, but it's going to take them more time, right? As you can see, it takes them more time to confirm the weekly uptrend in that case. But if we do come down here, guys, 400 to, I already opened up a leap yesterday around the 414 area at the midpoint because I like Microsoft stock over here. But in the event we come down here, 400 down to roughly 390, I will be adding another leap contract to this trade. It's been great area of support for Microsoft over the course of the entire year. And this is the 50, it's a couple things. Not only is it the daily 200 EMA, and usually Microsoft in the context of a bull market, when Microsoft taps the 200 daily EMA, it's usually a good buying opportunity. You can see how few times it happens, right? 2016, 2019, COVID, this is the bear market, right? Obviously massive bear market, supply chain constraints, inflation through the absolute roof, fastest hiking cycle in the last 25 years for interest rates, totally different market. Now that we're actually in a bullish market, the tests of the 200 EMA usually quite good. And we have a few, right, in recent price action history, and they've all responded in a bullish fashion. The weekly 50 EMA is also a good indication of when it could be good to acquire this stock on a pullback. Once again, COVID only, 2019, the last time, well, I'd have to zoom all the way back, but you can see back here even, right? 2015, 2016 a few times, usually a good proposition to go shopping for some Microsoft for the long term or even for some swing trades in or around. I'm not saying that this is like a block of cement, right? We can come through it, but usually when we pull through it aggressively, good, decent buying opportunity because we know that a snapback is most likely coming eventually, even though it may take a few weeks. Moving on to Netflix right now. Netflix, well, of course, we just did the price action, right? Up about 5% in the after hours. So we knew they had the hourly downtrend. You can see every single morning at the open, flush, right? And then throughout the day, the bulls try their best to kind of keep up the price action. So now that earnings are out of the way, a big engulfing move by the bulls back above our short-term moving averages, creating a lot of space. So it's up to them now to reset this into an hourly uptrend. If we can get that confirmed hourly uptrend, we know that daily consolidation is done, and then we seek to see the size of the bounce. Now, the size of the bounce right now is good, 720, right? So if we were to use the fib on this, if they maintain this into tomorrow, oops, that's the wrong one. If we maintain this into tomorrow, we know one thing's for sure, right? We had the daily uptrend on Netflix, had it, and now we lost it because we flushed the lows, right? That being said, we're in a big area of support, 6,700 down to about 671. And now we have somewhat of an engulfing move up to 720. So put the fibs here. Just keep in mind, 720 is like right about, let's call it right about here. So we're between a 618 retracement and a 782. That's a very good bounce for the bulls. Creates a lot of space for them to get that trend back. And now we are back above the big area of support. So the bulls do have a decent amount of space and this big support level to pull back into, reset into a daily uptrend, and possibly, because this weekly candle is not finished, possibly just continue into the nice weekly uptrend expansion. So not looking too bad. No major red flags to speak of on Netflix just yet. Just watch how we respond on the hourly. Can we continue this push? And on the daily as well, can we uphold and get the daily uptrend back to the bulls? Now, moving into NVIDIA, give me another brief second. NVIDIA up about 0.89%. NVIDIA today, new all-time high, right? High of the day for NVIDIA. They broke it by a few pennies, 140.89. The previous one was 140.76. 13 cents, guys. They broke the all-time high, but still a new all-time high. Congratulations to the bulls. Now, daily uptrend is more than confirmed. Daily higher lows are set and looking for the continuation of the trend expansion. Now, if we do pull back a little bit, looking for a daily higher low, anything pretty much above 128, daily higher low for further trend continuation. If we cannot get it done and roll this entire move over and flush these lows and blast through this support range, well, that'll be a loss of the daily uptrend. And you guys should know that we are just looking for a weekly higher low for possible further trend continuation. Where we could pull back on the weekly, the bigger level, if we break through this short-term one right here, the bigger one here, guys, is 119 to 115, right? That would be an ideal location, possibly a pullback, retest of that range and run. If ever we pull back there, I'll be writing some short puts aggressively on NVIDIA in the 719 to 715 range. But watch out, guys. The weekly MACD is pointing to the fact that this one may just have a little bit more juice left in the tank. Even if we consolidate for 1 or 2 weeks, this one will kind of stay like this. And then eventually, you know, the momentum does favor for a little bit of upside continuation. NVIDIA remains strong. Moving into Tesla right now. Tesla's still doing a whole lot of nothing this week after the robotaxi event. So daily downtrend still in motion, trying to hold these lows. If we flush these lows around this 200 daily moving average, of course, daily downtrend simply continues. And then unfortunately, guys, you got to watch out for the weekly. 203 is the last line of defense. It is still, technically speaking, a weekly uptrend. However, we have now lost most of all the momentum at this point, right? That being said, we're approaching still a very large area of support, guys. 220 down to 200 is no joke for this stock, right? It's acted as an area of heavy price action a lot of the times, whether as support or upside resistance when we pull into it, right? This time should be no different. All the moving averages are below us as well. In the event we move lower on Tesla down here into the lower $200 range, it will free up maybe some short puts for us. I would love to play short puts on Tesla. I haven't done them in a while, right? Maybe the 190 down to 180 range is my preferred location for selling puts, right? If I can acquire some stock down here on a very volatile move, possibly after earnings, I wouldn't mind taking the stock down there so much because the valuation becomes a lot more approachable. Now, what do the bulls need to see? Need to see a break of 224, guys. That would be a confirmed daily uptrend. And then we would need to see how long can they maintain this daily uptrend so we can get a sense of whether or not, right, we can get a V shape, that is the unlikely scenario, or maybe just a 2-step weekly uptrend recovery process. So keep your eyes peeled on Tesla, but I would enjoy playing, if we come to the lower end of this range, playing some short puts slightly below it. And lastly, Palantir, the absolute rocket ship. Palantir playing some good defense here. Bulls defending the 12 EMA quite casually. So they had the daily uptrend clear as day, of course. Daily higher lows are set, higher highs, and now looking for the higher lows, right? So still no real confirmed hourly uptrend, a bunch of triple tops right here, no confirmation of the hourly downtrend either. So the bulls are fighting to maintain the daily higher lows here. In the event we pull back though, they have a bit more space. Anything above this guy right here, 38.80, gonna be looking for that daily higher low for further trend continuation. But the red flag comes if we take back too much of this move, guys. It opens the door for lower high into lower low, and that would not be the worst thing, right? We would just be looking for a very healthy weekly higher low for further trend continuation. If we pull back here, 39 to about 38 is going to be the next big area. That was the one that we broke through. It took us a while to get through this one, and that will probably be your next area of support for the bulls. The 12 EMA should be curling up there as well. So that'll be a likely area that if we do pull down here, let's call it, 39, 38, maybe 37 and a half type of thing. I'll be probably looking to write some short puts, maybe $35 to $34 region down here to continuously play the Palantir upside. Love the stock. Fundamentals are good. I won't lie to you guys. As a Palantir shareholder, stock is a little bit expensive right now, but we know these markets, things can stay expensive for quite some time. And this does not take away from the quality of a business that Palantir is. Beautiful product, great, solid management team, and great after great service by the team as well, right? After the product is implemented in various companies, the upkeep, right? The servicing and the customer support that these companies receive is really top class quality. So those are the things that sets this one apart, in my opinion. But all in all, no major red flags to report just yet. So that's been pretty much everything for our daily market recap. Hopefully you guys enjoyed that. If you did, consider dropping a like on the video. Would really appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. Would love to have you back here. We do these every Monday to Friday after the close. And if you have any questions, always feel free to leave me a comment down below. If you want me to look at a specific stock, some technical analysis, second opinion on an options play, not financial advice, of course, or anything of that nature, please leave a comment down below. And in the event, guys, that you want to join our private Discord, where you will get all of my plays, and we've been doing very, very, very well. We actually had an earnings play on Tesla, which I'll show you tomorrow. We've been doing very well, right? A lot of success by our members, but here's our weekly recaps. The green check marks are all wins, and the red are little tiny losses. So you can see since we've started this Discord, it has been fairly good. Few assignments, which we've gotten out mostly profitably, right? So if you want to join this Discord, get all my wheel trades, but also the shares, call option trades, the leap trades, long-term investment trades, and all my trade ideas, the live streams in the morning, and our private content, and talk to me all throughout the day. Ask me your questions, whether you're a beginner, intermediate, or advanced. Shares, advanced option strategies, anything you want, guys. The link to the Discord is always down below, so feel free to check that one out if you are interested, and maybe I see you in there. If not, see you guys tomorrow after the close. Take care and peace.